Today's webinar is sponsored by ADS Securities, London, and we will be looking for overall the following pairs. We'll have the USD Japanese yen covered. We'll cover, of course, the crude oil. Then we'll go ahead and look at it from New Zealand dollar, US dollar. I've received a request that someone wants to analyze GBP New Zealand dollar. And finally, last but not least, I have the special currency pair for today, and that is the USD Turkish Lira. So let's actually go ahead and start from the USD Turkish Lira. If you go ahead and analyze the pair from Fibonacci wave point of view, you'll see that the pair has found itself a support at 290. And over the night, from yesterday basically, something specific has happened in Turkey. And that is the Turkish banks calling for all the pending credit installments to be paid from their retail clients. You might say, well, it is okay for the banks to ask for their credit installments to be paid, but not as a mass. When such thing is happening, it is an alarming situation. The reason being the fact that if all the banks suddenly decide to call all their installments to be paid back ASAP, it means that the country and overall the banking system is about to enter into a very bad crisis. So that being said, we are looking for the Turkish economy entering into a financial crisis at a very, very close time period ahead of us. And therefore, it's giving us the opportunity to go ahead and start longing the USD Turkish Lira. That being said, my actually, unfortunately, you haven't seen the analysis yet, but the buy order that I had was at 295.60, which has just been triggered. So we are looking for buy orders 295.60. And my targets, my stop loss is at 294. Okay, it is 160 pips stop loss, but nonetheless, we are looking for close to 1,500 pips return. Our first target is going to be at 96.40. Then the second target is going to be at 3.01, and third final target remains at 3.10 level. So combining all the way from here to the bottom, we are looking for 1,473 pips profit opportunity right there for this currency pair. Moving on to GBP New Zealand dollar, as it was requested from one of you guys. I haven't analyzed it yet, so I'm going to analyze it with you. Just give me a second to count how many candles we have over here, because it's very important for me to see the right wave. So 1, 2, 3, 4, 5, 6. This is not a valid Fibonacci wave. 1, 2, 3. This could be, or this could be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is not a current Fibonacci wave. So we will take this specific wave over here. That being said, let's draw our Fibonacci on it, and we go on daily to see whether or not this is a valid Fibonacci wave. As we always do, the way we are supposed to define our Fibonacci wave is to check whether the wave has behaved afterwards at 38.2 or 61.8% Fibonacci retracement. We can see that 61.8 has acted as a major resistance level and support level. So has so far the 38.2%. So we are very confident that this is a correct Fibonacci wave. That being said, yesterday the pair has bounced off the 88% Fibonacci retracement zone. This is a custom Fibonacci retracement zone. And we are looking for a bullish opportunity overall. And my suggestion would be to look for yesterday's highest high, which is at 2.1920 level. Let's move on to 1 hour time frame to see it better. So 2.1920 level of yesterday, and overall 2.1940 level is the main one. So up until there, the pair should be rising. It's another 60 pips. I wouldn't enter the position, any position right now, because if I were to enter a position on this currency pair, it was supposed to be at 2.1804 level. and unfortunately it has already gone and passed. So I wouldn't really risk right now because it just adds extra 70 pips on our stop loss there. So our target though is for now at 2.1950 overall, and if that level is broken above, which is possible but not for today, I wouldn't really enter a position on it today yet. But above 2.1960 level, I would be targeting initially at 2.21, and from there onwards I would target 2.2230 level or 2.2222 level. Make it fun out of the numbers so far. So this is the approach that I would take. Now let's look at it a little from different aspects to see what we can really expect from this pair. We see that all the moving averages, well, on daily time frame, one of the moving averages is showing downwards, another one is flattish showing upwards, whereas MACD is showing upwards as well. The signal line is going below the MACD bars, which is a possibility of trend reversal. On hourly time frame, we have the MACD bars above the zero line. It's a bullish indication. MACD signal line is below the MACD bars, bullish indication. And we have just had the golden cross crossover of hourly time frame, 50 and 200 moving average, which is also a bullish indication. So therefore, stop shorting this pair and look for possibility to long, but I wouldn't really give the exact level where to buy or where to sell. But overall, you know, we are at a good level for expecting a further breakout on this pair. Now let's move on to New Zealand dollar, US dollar. As we expected yesterday, we have seen the pair gone down. Our pending order at 38.2% Fibonacci retracement zone is still valid. So we have another drop expected for this pair, which is approximately 80 pips from where we are now. So if you want to enter a short position on it, you could do it at 0.6580 level approximately, but make sure to exit it at 0.6520 level. And that's the buy level that we have on our books. Our targets from there onwards remains all the way upwards towards 88%, and that's 0.6823 level. Moving back to crude oil, our analysis basically rocked the industry. I think we did better analysis than anyone else in the entire market, because we had our entry at $26.04 level, and that was the lowest that the crude has ever had so far this year. And we entered at 26.04. From there onwards, we have bullish entry, and currently we still are holding on to our outlook. If we move on a little forward, let's zoom in a little bit. I believe that crude bullishness will continue until 31.60, and from there onwards I'll be looking for short positions. So look for short positions at $31.60 level. Let's see if it is supported by hourly time frame as well, because we are not investors, we are traders basically. So 61.8% Fibonacci retracement zone, which is at $31.60 level. It is a major support resistance level as well. But now, since I look at it on a smaller time frame, I believe that I wouldn't really put a pending sell limit order at that level, but I would put my sell limit at $32.80 level, and I would just hold on to it. Sell at $32.80 and hold on to it as much as you can, and that's going to be it. Well, as much as you can, by the way, means hold on to it until $30 level. So that's not way too much. It's approximately, well, 250 points profit opportunity there. On USD Japanese yen, as we said yesterday, the pair has broken above the trend line. This we still are holding on to our bullish entry, but if you are hesitant and you want to reserve some of your profits so far, you could consider to exit your position right now, because there is a possibility that it's going to break below. And I would expect to see another round of buy opportunity for this currency pair towards 113.30 level approximately, and this is the level over here. It was previous support and resistance level. So 113.20, 113.20 will be our possible buy opportunities once again, and we will. I'm pretty convinced that we'll get the best out of this currency pair from there onwards as well. Our final comment will be on gold for today. And if you look at it, we said yesterday that the valuable metal is expected to go down and touch the 1,197 level. It has done, it has happened, and we have, if you were shorting it, you should have already exited it, because 1,197 level is 138.2% Fibonacci retracement zone. And overall, the pair has also touched on hourly time frame 200 moving average. So from here onwards, we are expecting bullishness. Our first target remains at 213, 222 level. Of course, it's 1,200 and 1,222 level. And it is supported by our other indications as well. Why is it that we should be expecting to long from this level? Well, we started to long this currency pair because of this candle over here. This is the candle that I'm looking at. It is the daily candle of February the 9th. And we also had another long positions February the 2nd based on this candle. So if we look at it, because it's a unconfirmed sword candle, and it's a type of a candle that tends to continue, but its open and close level tends to give us a major support resistance level. And if you look at it, the pair so far has reversed exactly at 1,190 level, which was at the almost open and close level. Well, it was at the close level of this candle. So that being said, this is the support level that we have. So we should be long in it, and our long positions should be limited to 1,222 level for now, and that's approximately 200 pips profit opportunity. On my list, I see that one of the participants has asked for GBP USD, so I'll add it for today as well, but it will be limited. So for this currency pair, I'm still hesitant, because you can see it's like a zigzag pattern. So far, it's not confirmed, and you can see it is within the triangle as we discussed. So based on our analysis from the last 4 or 5 sessions, we have been telling that as long as the pair is within the triangle, we don't really trade it. So look for a breakout. Our breakout basically should be above the 1.4606 level to long, and a break below should be below the, 1 second, let's move on hourly time frame to tell it even better. We should be looking for approximately just over here, 1.4390 level that we should be looking for. Below 1.4390, short, above above 1.4590, 1.4604, start buying this pair. That's it so far for today. We have analyzed quite a few currency pairs. The recording of the webinar will be available on a2zforex.com, and we'll have the written pending orders as well for many of the currency pairs. So stay tuned. If you have any questions, feel free to ask to us anytime you want. Thank you very much for spending your time with us. Bye-bye.